let's just talk about what happened really last week. So we talked about this. If you guys are part of the Chaos Crew, a part of our watch list, we talked about on Monday last week about how we would potentially experience some volatility because of the Fed going on. We actually touched on this last Stock Watch Sunday, as well as the quad witching that happened. And then the Dow ended up having its worst day on Friday since October. What didn't, though, were tech stocks that actually continued to go up and did really well. And a lot of this had to do with the fact that the Fed had talked about potentially tapering and then also raising rates in 2023 when they kind of backtracked a little bit because they had said that originally they were going to do it in 2024. So they moved the timeline up, and everybody kind of lost their mind a little bit. And we said this could potentially happen.
Yeah.
But I don't think that this changes anything. The economy is roaring, and really when the rates get raised, stocks, equities, they continue to go up. That usually means that it's a good sign. It's a good sign the economy is doing really well when rates go up.
Yeah.
And so obviously we saw a lot of the tech, the FANG stocks went crazy. And I think that we could see that carry over a little bit into next week. We're already seeing that the futures right now, NASDAQ is up while S&P and Dow is down right now. Nothing crazy, but it looks as if the trend could continue at least for the next couple of days. And then we might be able to see a turn. But man, Fat Man Zoom, I think there's nothing that's keeping me away from the reopening plays right now. There's nothing that's keeping me away from oil, industrials, that sort of thing. Even though we've seen some of that pull back, I think it's just a good opportunity, especially in the short term, to see these go back up again. We're coming up on the summer months. Demand is absolutely insane, especially for travel and vacations and all that good stuff. So there's nothing that's keeping me away from any of that.
Yeah, we've talked about this. We've talked about opportunity, and this is part of the strategy, is like looking for opportunities in the market, healthy companies, healthy stocks, and looking for, a pullback and looking for them on discount. And so what the name of the game is just finding those opportunities, which I think we have some, specifically in the 5 we have tonight for our top stocks or stocks that we're watching this week. But nonetheless, there's always opportunities, and they're created by situations like this.
Yeah.
It's our job through our due diligence to decide, all right, are these material or non-material in their impact to the stock? And I think we both agree that the situation with the Fed raising rates, or at least moving up the timeline, is a non-material issue.
Yeah, and I just wanted to read something that came out from the Fed, because the Fed seems to think, or not the Fed, from Barron's talking about the Fed. Barron's had put out basically that the stock market isn't buying what the Fed's putting down. They're saying that, being that the Fed is saying that, inflation is transitory, it's continuing to, and they're just going to take it slow. It seemed hawkish, even though he was still toughish at the same time. I don't think anything he said was really all that hawkish, but they said, according to Barron's, that when an economy is running a debt to GDP ratio at 100%, more growth is debt driven, and it's very hard to raise rates. And so it's almost as if they're not even buying that rates are going to get raised in 2023. And this could mean that tech continues to roll and do really well. Is this going to be another great rotation, like we saw the rotation into cyclicals and that sort of thing? Or is it going to go right back to what it was? And I still think that that's probably going to be the latter, at least in the short term. Should we be not owning tech stocks right now? No. And we've talked about this. I mean, Amazon's at a crucial resistance point right now. And I thought for sure we were going to see it blast up above that on Friday, but we'll see what happens this week. But I think that this is almost kind of like a fake out for tech. And it's not to say that you shouldn't own it, but I don't think it's going to potentially outperform some of the cyclicals again this year, maybe leading into next year as rate talk may continue. But I think that, the cyclicals, the industrials and that sort of thing could still outperform, especially oil. But tech's still going to hang in there as well.